Hi, realtor friends. My name is Kyle Malnati, and I am the employing broker of a boutique commercial real estate firm here in Denver, Colorado, named Calibrate Real Estate. I specialize in the sale of apartment buildings, and today I'm going to teach you all how to analyze a real estate investment. Whether it's an apartment building or a single-family home or even a commercial property, the tips that you'll hear in this presentation are going to help you analyze commercial real estate. So without further ado, here's some more information about multifamily investing. I believe that everybody can do it and everyone should do it. I'm passionate about helping people learn how to retire and retire with dignity. And so the first thing I always talk to people about when I'm communicating with them about their real estate investments is, why are you doing it? There's a fantastic TED Talk by a gentleman named Simon Sinek that's almost 8 years old now at this point, with over 35 million views and counting. And Simon Sinek talks about the most powerful companies communicate from their why, from their purpose. And as you can see there depicted on the screen, he calls it the golden circle, that most people know what they do, many people know how they do it, but very few people know how to communicate why they do it. And so let's start with why. Let's define your purpose. Simon Sinek further says that people don't buy what you do, they buy why you do it. So it's not what, it's why that matters. Viktor Frankl, Holocaust survivor and Nobel Peace Prize winner, in his book, Man's Search for Meaning, says, when you know your why, you can endure any how. And so for me, I'd like to share a story with you about a client of mine. This gentleman, pictured on the screen with me, is a gentleman named Jim. Jim worked for over 30 years for the company Lockheed Martin here in Colorado. Jim is literally a rocket engineer. He is the type of person that you would meet at a party and know that he's very, very intelligent. And so we're actually standing at his apartment building, his condo building in Cherry Creek, and I was invited to his retirement party. I'd never been to a retirement party. As a young person, that's something I haven't had a chance to go to many of, and I know that after the recession in 2008, 9, and 10, there's a lot of people who've had to delay their retirement, and so I was so excited to have my wife and I go to this retirement party. So just picture the scene. Right outside the door here we're standing, and inside the clubhouse of his condo building in Cherry Creek, it is packed wall to wall with family, friends, and coworkers of Jim's from Lockheed Martin. And so Courtney and I had a gift that we're going to bring to Jim. We see him from across the way, and he waves to us, and it's so packed in there we have to kind of shimmy through this big retirement party. And we get over to Jim finally, and Jim says, "Kyle, thanks for coming." And I said, "Well, thanks for inviting me." And he goes, "No, thank you for helping me retire." And I was like, "Whoa, what do you mean?" And I kind of knew what he meant, but I certainly wanted to hear have my wife hear what he was about to say. He said, "Thank you for helping me retire." He's like, "I had a great income at my job here at Lockheed Martin, and certainly I've got some other retirement, but the work that you've been doing with me in the apartment business that I have on the side has really enabled me to retire with dignity, to retire earlier than a lot of my colleagues, and basically have options. And what retirement is wrapped up in is really freedom. And so my purpose for helping people buy and sell multifamily property is to help them retire with dignity so that they have the freedom to do whatever they want. Now that may mean that they can continue to work in the job that they love, but they've got options if something changes. And so for Jim, I've helped him sell one apartment building and buy two others. And Jim is just a wonderful example of why you should invest in real estate. So let's get to the nuts and bolts. Let's talk about an actual investment analysis. So I work with a lot of residential realtors. The majority of our realtor community is residential realtors. And a lot of people will ask me how to analyze an investment property. And so some of this for some of you may be remedial, but a lot of you, it's a good tune-up. And so this is an actual building that my team sold over the past year here. It's a 9-unit apartment building in Denver's Congress Park neighborhood. It was built in the early 1900s. The building's about 8,500 square feet in size on a lot size of 6,250, and it's got 4 parking spaces in 2 garages behind the building. So let's talk about some analysis definitions that you'll need to know when you're analyzing any type of investment property. net operating income, or NOI. Very simply defined is you take your top line revenue and subtract it by all of your operating expenses. We're going to go through this in just a moment, so you can just think about that conceptually before we actually look at an NOI calculation. Then cap rate is a word that's thrown around by a lot of real estate investors and brokers. So what does that mean? It's that NOI that we just calculated, so income minus operating expenses, divided by your purchase price. And what a cap rate is, very simply defined, is it's your year-over-year return if you were to pay all cash for the investment. Cash on cash return and cash flow are the next things that people will ask about. Cash flow, very simply defined, is that NOI, so income minus your operating expenses, and then we're subtracting out any loan payments that you would have over the year. So this is going to be an analysis based on if you were to actually get a loan to obtain the property. Cash on cash return is that cash flow we just calculated, NOI minus your yearly loan payments, so that's going to be your cash flow at the bottom. And if you divide that by your down payment, that shows your return on investment. And that's a good way of using an analysis of, okay, if I buy this property, instead of buying a stock portfolio or mutual funds or some sort of futures, what's my opportunity cost for buying this piece of real estate versus buying something else? Total return is very interesting. So that's your cash flow, add in the reduction of your principal on a yearly basis, and then divide that by your down payment. So this is not money you can necessarily take to the bank or go buy lunch with, but as you're reducing your principal, that adds to your return. And so total return factors in the principal reduction of your investment. All right, so let's go into an actual analysis. We've rounded off the numbers so that the math is really easy, but this is how this property actually operated when we sold the building. So the rental income was about $134,000 on the top line revenue. So that's rents, laundry income, any utility bill backs, all of that's included. Then operating expenses. Operating expenses are everything except for any type of loan you would have. So these are things like insurance, management, your property taxes, utilities, repairs, and any other administrative costs like the cost for your CPA or any type of legal work if you have an eviction. So as we run down this, that $134,000 is going to get eaten up a little bit here by insurance at $3,200, management $7,800, taxes $7,200, utilities $6,800, repairs of $5,900, and then administrative of $1,800. So the total expenses $32,700. So we're going to subtract that rental income of $134,000 minus $32,700. And this property was listed for $2 million. That NOI, like I said, is calculated by taking $134,000 minus $32,700 to get $101,300. So how do we calculate our cap rate? Now we're going to take that $101,300, divide that by the purchase price of $2 million, and that is a 5.06% cap rate. So just again, define that. If you were to buy the property all cash, no loan, you'd be making a 5% return on your investment. Some people think that that's low. Some people think that that's high. That's not really what this is about. It's about calculating an actual real life listing that we had and saying, how does the return work? All right, so now if someone were to get a loan, and I always caution people, a loan makes the investment harder to cash flow. So I love it when people buy buildings with cash, but the reality of this is it's a $2 million investment and not everyone can buy it with cash. So here's how a typical lender in Denver will look at this. So most lenders want the buyer to put 30% down, therefore the loan to value would be 70% loan. So that's $1.4 million on our $2 million purchase price and $600,000 down on our $2 million purchase price. The interest rate at the time that this property was offered to market was about 4.2%. Interest rates change constantly, so make sure to talk to your lender because they're changing daily. Annual payment was about $90,000 a year. So let's do the math. $101,000 NOI minus our $90,000 annual debt service or loan payments. And then if you add in the reduction of the principal, you've got a total return of $43,000, which is 7.19% return. Now, what state are we in the market? Is that cap rate a good cap rate or not? As you can see from my friends at Apartment Appraisers and Consultants, These are trends in capitalization rates. So again, that non-leveraged return over several decades. And so as you see on the graph here, it will show that cap rates used to be much higher, and they've obviously fallen quite a bit. One rule of thumb that I see in my industry is that if you look at the prevailing interest rate that lenders are willing to offer, cap rates are typically 1 to 1.5% higher than the interest rate, with the idea that people want to have a positive spread over the money that they're borrowing in the return that they're getting. And so right now, as you saw on that description, 5% is our cap rate. But cap rates will go up as interest rates go up, and as interest rates go down, cap rates will go down a little bit, and they'll continue to maintain that 1 to 1.5% range. And that again is just in Denver. So if you're interested in learning more about real estate investing, I have a podcast called The Kyle Malnati Show where I interview actual real estate investors. These are people that are my clients and friends, and so I'm going to talk just briefly here about a few of the people that I've interviewed and some great episodes if you want to learn more about this. So again, The Kyle Malnati Show, I've interviewed a gentleman from McLean, Virginia named Ron Cathell in episode number 34. That was our last episode of the show. Kendra Todd is a super powerhouse realtor in Seattle, Washington. She was actually the winner of The Apprentice. She's an author and she's an avid real estate investor. Bo Mankiewicz is a realtor in Washington, D.C. that manages a powerhouse Keller Williams franchise with over 1,000 agents, and he is a real estate developer. Todd Narlinger, the broker owner of Madison and Company Properties, a company I worked at for 5 years. Dwayne Duggan of RE/MAX of Boulder, been in the business for 40 years and has invested in real estate in Boulder since the 70s. Bo Mankiewicz was featured again. This is actually at the NAR building in Chicago, Illinois. Brad Allen and Eric Rollo. So they are on my new podcast, which is called the Calibrate Real Estate Podcast, which is not only on YouTube, but also on iTunes. And so I'd ask for you, if you love this presentation, to check out both podcasts. The Kyle Malnati Show is on YouTube. The Calibrate Real Estate Podcast is our newest podcast, and we are recording episodes both on iTunes and simulcast on YouTube. So I really appreciate you taking the time to watch my presentation today on YouTube. Again, I'm Kyle Malnati. I've been honored to win a few awards in my career that I'm really proud of. The DBJ honored me in 2017 with 40 Under 40. Realtor Magazine honored me as 30 Under 30 on that national publication in 2012. I'm the broker owner of Calibrate Real Estate, and I am a proud realtor as a member of the Denver Metropolitan Commercial Association of Realtors. Thanks again for watching my presentation today, and I hope that you are more empowered and educated to invest in real estate or help your clients invest in real estate. Thanks so much.